Now there will be series of tutorials on this. Out here we are going to be understanding the negative externality and positive externality. How we are going to be implementing exercise tax. We are talking about negative externality. It needs to be taxed by an amount of external cost to the society. Please remember, whenever you are implementing a tax or an exercise tax on a particular unit of good or service, it's always going to be affecting or impacting the supply curve. Now that's very important to remember. Second, the excise tax needs to be applied to the supplier price. What happens to the consumer? Consumer is impacted by this excise tax, but always the excise tax has to be applied to the supplier price. We are looking at understanding externalities. There are both positive and negative. Positive externalities give external benefits to the society. They always impact social benefits. When you are talking about negative externality, it is external cost to the society. You can see social cost is equal to private cost plus external cost to society, which is negative externality. When we are talking about social benefit, we are looking at positive externality. At equilibrium, the quantity supplied is equal to quantity demanded. We see that a demand slope is downward sloping. That is, as the price reduces, more quantity is demanded. The supply curve is upward sloping. When the price increases, more quantity is supplied. E, quantity supplied is equal to quantity demanded. Let's look at an example of negative externality. We see this within all the problems, the whole module which is coming on externality. Now, when we are looking at cost, which is the social cost, is equal to marginal private cost and marginal external cost. Here I'm using marginal because I'm taking perfect competition. In a perfect competition, the marginal cost is equal to average cost, and we looked at as a perfect competition at a later date. Marginal social cost is equal to marginal private cost plus marginal external cost. Whenever I'm talking about marginal external cost, we means the externality. See, the marginal private cost plus the marginal external cost increases the price. The price moves from P to P dash, which I've put on P star. The increase in the price reduces the quantity. So the quantity Q it shifts from Q to Q star. So now here the meaning is as the externality comes in, a negative externality is optimal to decrease the production of goods and services. Now usually the tax, whatever tax you're going to be putting in, the tax to negate the negative externality will be equal to the marginal external cost. There are various ways to calculate it. We are not going to go in this particular module. I'm not discussing how to calculate marginal external cost. This is just to give you a description. So whenever we are taking as in a perfect competition, the marginal cost is the supply curve. The demand curve we can already see, which is given by DC, is downward sloping, and you have the marginal cost as upward sloping. There will be a special tutorial on perfect competition. Fair bit of idea of coming off of a negative externality actually increases the price and reduces the quantities. By equating this equation to QD is equal to QS, that's what we learned from the demand and supply equilibrium equation. Plus, once we solve this equation, then we'll put the second part of the equation where we are going to be implementing a tax, an excise tax, and we see what exactly happens. QS is equal to 5P plus 2. We look at the next equation and we equate QD in terms of P. We get QD is equal to minus 2P plus 9. And QS is equal to QD. You have 5P plus 2 is equal to minus 2P plus 9. And from there, we are going to solve it for the value of P. To take minus 2P to the left hand side becomes 7P. And then 2 goes into the right. So it's 9 minus 2 is equal to 7. 7P is equal to 7 or P is equal to 1. Now I've got the price as of any currency, so we're putting it as 1. So you're going to use that P equal to 1 and equate it as in the equation QS. 5 into 1 is equal to 2 is equal to 7. The quantity supplied is 7 at equilibrium. So at equilibrium we have the prices as 1 and quantity as 7. We'll go to this next part of the equation. Government now wants to introduce this excise tax. See, cigarettes, for example, are heavily taxed in Singapore or in Europe. We are going to be putting a tax per unit. Whenever you're taking a tax per unit, always actually reducing the supplier's price. That's what, because it is at the production. Our price goes by P minus T. We are going to be equating this particular equation, and we are going to be getting now the new equation. We have QS is equal to 5P plus 2 which is going to become 5 into P minus T plus 2. Whenever you're looking at implementing any tax, exercise tax, it's always on the supply equation. Put the supply equation, you open the supply equation, equate the supply equation to the demand equation. Now you have 5P minus 5T, 5P minus 5T plus 2 equal to, we'll put the demand equation, which is equal to minus 2P plus Q. Solve for P so that you take the 2 to the left hand side, you have 7P minus 5T equal to 7, which is 9 minus 2 is 7. Now you can put here, now you have a T, you can put at T equal to 1. Put T equal to 1, you have 7P equal to, which will be 7 plus 5 equal to 12, or P is equal to 12 by 7. So you can, calculate that. You will see that the price has actually increased. To be putting this price P into the equation, QD is equal to minus 9 is equal to minus 2 into, which is comes as 12 by 7 plus 9. You will get the quantity demanded equation. In this question, we are trying to understand social cost, social benefit, and private benefits. This is an example of positive externality. Whenever I'm talking about positive externality, there is no external cost for the social cost is equal to private cost. Whenever I'm giving a selling price of module is 5 per dollar, I'm talking about private benefit. When we are calculating social benefit is equal to private benefit plus benefit to the society, we know the selling price is 5 per module, which is 5 plus the benefit to the society is the positive externality. However, you're talking about positive externality, you're talking benefit to the society, which is 7. Total is 12 per unit.